Hey everybody, Tracy Tofty with Keller Williams. I'm really excited today to be talking to Scott Groves from Movement Mortgage. A lot's going on right now in our industry, and I kind of just wanted to have a conversation because you and I talk on the phone, Scott, and we can go for a long time kind of discussing everything that's going on. And I was thinking, you know what? I really think people need to listen to what we have to say.
Well,
So
thank
thank you.
I appreciate that. I don't know how much people want to listen to what I have to say when I've got this homeless beard going here in quarantine, but we're making
Well,
the best.
I'm in my son's bedroom. He's off at college, so I have a bed over here, and I'm usually a little bit more in a professional setting, but it is Saturday morning, so we're just
Yeah,
gonna
it's
make
Saturday
do.
morning. We're in quarantine. Again, we're trying to do the best that we can,
Yep.
or shelter in place, whatever the correct term is. So yeah, just want to answer questions for consumers, homeowners, potential homeowners, and just see, what value we can bring as far as the mortgage market, the housing market. And I've got some questions for you as well. So let's go from
Okay,
there.
fantastic. So the forbearance, the forbearance offer that's been presented, I want to first talk about that for a little bit, because I think that there's a confusion that homeowners think forbearance is forgiveness. And yet we don't know if forbearance is a default yet. We just know that it's a forbearance. So I kind of wanted to talk about that a little bit and exactly what that means for the future, for refis, for if you're purchasing a house again, for if you're getting a car loan, things of that nature. Because I think right now people are just thinking one foot in front, but it could affect in the future how
Yeah,
things play out.
absolutely. And you and I have talked about this endlessly. Like, hey, the first thing we kind of have to get out of the way, you and I both, because I know we feel the same way on this, is that, a lot of people dealing with, household, community, national tragedy. Some people have, sick family members and whatnot. So by all means, whatever decision you have to make for you and your family and your personal health and your financial health and your family's health, I get all that. Tracy and I are just here to kind of stay in our lane and talk about housing and mortgage, which is the stuff that we know how to talk about. But I know,
Absolutely.
Tracy, you're, super compassionate to anybody that's dealing with a health or true financial issue. We just try to keep the train on the tracks as far as the mortgage and the housing industry
Absolutely.
goes. So
This is
I
all
know
purely
all that goes into this.
informational. Yes, it's purely
Right, right.
informational, no judgment. Obviously, if you're in a very a big financial hurt right now and you need to do what you need to do, we totally understand. So we just kind of wanted to just give the facts and educate.
Exactly. And now that being said, there's a lot of mortgage terms being thrown around that are kind of entering the zeitgeist and the popular nomenclature. And a lot of homeowners are learning a lot about their home loan that they probably didn't understand. So I think the first thing to get out of the way, and you mentioned this, is if you have the means, if you have the savings, because that's why we have savings, if you're still working, if you have, tenants that are paying rent, if you have the means, please, please, please continue to make your mortgage payment. And the reason for that is, one, it's what we all kind of contractually agreed to do. Two, that's why the bank evaluated when you bought a house, Tracy, when I bought a house, did we have some savings so that we could ride out these troubled times, loss of job, loss of a wage earner, challenges in our business, pandemic, as it turns out, probably not what underwriters were thinking, but that's why we evaluate if people have assets every time they get a loan. Number three, kind of on a global scale, if 25% of homeowners in America were to take a forbearance, it will effectively bankrupt the mortgage industry and dramatically affect the housing industry.
Yep.
And the reason for that, and I'll try to stay away from the politics and just talk about the finances. The reason for that is that, politicians, a lot of times the right hand of government is not talking to the left hand of government, or these bills that are introduced and these trillions of dollars that are spent, they don't really think about the unintended consequences a little bit farther down the road. And so they passed this legislation, the CARE package, that allows homeowners to have a forbearance for 3 months. And of course, CNBC, MSNBC, Fox News, a lot of professionals in our industry that aren't well educated on the topic, they go out and tell their homeowners, hey, just click the button and get 3 months of no mortgage payments. Well, that's not really how it goes, because a forbearance simply means that you're putting off the payments for 90 days. So the example I like to use, because I have a small brain and the math just works out nicely, is if you have a $2,500 mortgage payment and you go into a forbearance, so you your payment is forborne, I think is the correct word. You have a forbearance on your payment for, let's just call it May 1st, June 1st, July 1st. So you're feeling pretty good because, hey, everybody's a little scared. I'm a little scared. I'd rather have that cash in my pocket than, have to make my mortgage payment. But what's going to happen is that after May, June, July payments are skipped on this $2,500, when your August payment comes in, the loan servicer is going to want to collect $10,000. So there's already some conversation right now, like, oh, well, could we take those payments that you put on forbearance and tack them on to the end of the loan, or spread them out for a year or 2 years? Or do you apply for another forbearance and go another 3 months and just kind of exacerbate the problem?
Right.
But at some point, the bank wants their money. This is not a forgiveness. This is not the government stepping in and paying your mortgage on your behalf for 3 months, which a lot of people, that idea has kind of entered into the social construct. A forbearance basically just means they're letting you put off the payments for 3 months, but they're going to collect their money somewhere. And
but
so
here's what I don't get is that if you're not making your payment for 3 months, you have to assume either you're putting that money into savings and you're a really good saver and you're not going to touch it, or most likely if people are in financial hardship, chances are they're not going to be making this money over the next 3 months to be able to pay it in 3 months. So it's kind of like you're between a rock and a hard place. I don't quite understand why they thought that this was the best decision to make.
Yeah, I totally agree. And I kind of think about it two different ways. I think about two people I've interacted with in the last 30 days, right before coronavirus really came into the popular culture. We understood the risks and having everybody sheltering home. So I think of the guy who was the dealership the representative at the Tesla dealership, because I want to buy a Tesla. And I think about the gal that cuts my hair, right? And it just so happens I'm always having financial conversations with people. So I know that these two people make about the same money. The sales rep at Tesla and the gal that works at the salon that cuts my hair, who's awesome. She charges a fair price and cuts a lot of hair. So they make about the same amount of money, right? Well, in 90 days, what's going to happen is if this kind of normalizes and the economy kind of goes back to normal, whatever that means, I'll probably still buy the Tesla. They'll just deliver it, 180 days later than I thought. That gentleman will still make his commission and he'll kind of catch up in his personal economic realm. He'll probably catch up and he'll say, okay, cool. Well, at least I put off the 3 months worth of payments when Scott wasn't buying the Tesla. And now the money's coming in, the commission's coming in because people are going back to purchasing as normal. I'll have in my hypothetical scenario, the $10,000 on, August 1st or September 1st to make my $10,000 mortgage payment. Or I'll just work a little harder. My payment will go up for a year or whatnot. That's great for him. My poor hairstylist, she doesn't get to cut my hair twice when things normalize, right? So in 30 days when we're out of home shelter and I go to get my hair cut, now, luckily I have the means. I love her to death. I'm going to give her a giant tip. But for her, all those people that missed a haircut for the month or 2 months that we're in the shelter in place, that revenue is dead. It's gone for her. So she's not going to all of a sudden catch up and be able to make a $10,000 mortgage payment because I also know she happens to have a $2,500 a month payment. So for her, the forbearance of like maybe a little bit of temporary pain versus the headache in the future, it might make more sense for her to beg, borrow, or steal and try to make her mortgage payment, if she can, over the next 3 months, and then hope that she recovers with a bunch of pent-up demand for haircuts in July or August. The other thing that I'm worried about, going back to my hairdresser's example, is that what we really don't know is if you go on forbearance and it's not a forgiveness, at some point in the future, if she wants to buy another house or refinance or buy a new car, is there going to be some unintended consequences where this forbearance hurts your credit? Or underwriters look at it and say, hey, even if it doesn't hurt your actual credit score, as underwriters who have to make analysis and decision on whether or not you're going to pay your bills, well, we now have proof that this, for this chunk of time, you chose not to pay your bills. And again, I'm not judging anybody that has to do that as a function of survival, but I just think this idea of like, hey, skip 3 payments, it's on the house, the government's stepping in and paying for you. It's just crazy that entered the kind of social conversation so quickly.
Well, I had a client call their bank to do a forbearance because they absolutely needed to. Husband lost his job. Severance pay is very little for a very short period of time. And they told her that she could do a forbearance paid in 3 months, or at the end of the 3 months, they could tack it at the end of the loan, or they could do a loan modification, and that it absolutely wouldn't hurt their credit. When I hear that, it brings me back in the days of, defaults and short sales and loan modifications where they say one thing, but that doesn't necessarily mean that it's true. And that concerns me because are they going to put that in writing? Is there going to be something that proves that you're not going to get dinged for doing all of this? Because I understand people are having hardship now, but in the future, there has to be some sort of evidence documented that they chose to do this. And how is that going to affect them in the future? There has to be. I don't foresee it not being notated somewhere on their credit or something. It just doesn't seem possible. What are your
Yeah.
thoughts on that?
Well, we have a clear-cut example of this situation going back to 2009. It was called the HARP program,
Yeah.
Home something relief program, whatever the case may be. HARP, you just Google it if you really want to read the horror stories. And we got into this situation where the government stepped in and said, well, we want to help consumers. So we're going to offer these loan modifications and your bank will do a loan modification. The problem is the government, just like they did in this situation, didn't talk to the banks first. So now the banks are getting requests for HARP and loan modifications and whatnot. And then the foreclosure department is not talking to the loan modification department. And the government's guidance is different than what the banks were willing to accept. And so now we've got this absolute, shit show, excuse my language, of the left hand not talking to the right hand, who's stepping on the left foot, who's shooting themselves in the right foot. And then the poor consumer gets stuck in the middle and they're like, well, wait a minute. I have it documented right here that you said in order for me to get my loan modification, I needed to skip 6 payments to show that I have a hardship. And then I could come in and get a long-term loan modification. No, you got bad information. Now we're just sending you a foreclosure and now you have 6 mortgage late payments on your credit score. I mean, we have this exact scenario where government tries to do something positive for the consumer, doesn't run it by the bank. There's unintended consequences, and 6 months, 18 months, 2 years, 3 years later, I'm doing a loan for a client right now who's having to dig out paperwork from 10 years ago from properties that were foreclosed on and loan modifications that he did because it's still residually showing up on his credit, even though really nothing negative on your credit should show up for more than 7 years. But somehow this foreclosure and loan modification 10 years ago was handled so inappropriately, it's still showing up actively on his credit. Now, maybe I'm just Chicken Little. Maybe I just think the sky is falling. But I think the banks and the government have kind of proven over and over again over the last couple of decades that they're not so great at communicating with each other. So I just think that there's going to be some unintended consequences. And because of that, if you have the means, by all means, pay your mortgage payment. Now, I think the more interesting conversation is what happens to this poor guy that you have that maybe legitimately can't make his mortgage payment now and maybe can't make it in 90 days from now. Those are the people I'm really concerned about.
Yep. Me too. And I also wanted to say on the flip side of that is if you're not planning on moving and you have the way to pay your mortgage, you absolutely should do that. But I also have clients that can pay it and want to go on the market after all this is said and done, but they don't have a lot of equity. If they're considering doing a forbearance, if they're not going to be able to pay that, if they can't pay it in the 30 days and it gets tacked onto their loan or there's late payments or what have you, that's less money you're going to walk away with when you do go to sell your house. So I think people need to consider the equity they have in their home. Are they planning to stay in the home? Most important is, can you afford to make the payment? And if you can, you absolutely should. Because if you want to pick up and move, you're eating up that equity if you cannot, for some reason, make that payment. So it's just something to think about. Like you said, if you have to borrow from someone, whatever you have to do to protect your equity. Because I'm going to ask you the $1 million question here, Scott. I know you don't have a crystal ball and neither do I, but after this is all said and done, are prices going to drop Or is it more like pent up demand? Because I certainly have a lot of clients that are just waiting on the sidelines for all this to be over, hoping by summertime it's all said and done and they can get back into the market. What are your thoughts on that?
Yeah, so I have a
And I
couple.
won't hold you to it, by the way.
No problem. I have a couple competing thoughts. You know, you and I have been doing this a long, long time, 20 years for me. So now it's kind of through 3 brutal cycles of real estate and mortgage disruption. I think they're not really building a whole lot of new houses in California. There's still a whole lot of people moving to Southern California. There's a whole lot of pent up demand. You know, there's no new land being built. And so I think there's going to be a fair amount of demand in the housing market. And I think that should keep prices stable or maybe even trickling up, or trickling upwards, even though there's a lot of uncertainty. There's 2 places where I'm concerned. You know, I made the pretty bold claim that if 25% of homeowners go on a forbearance, it could, you know, kind of change dramatically the landscape of the mortgage industry as we know it. And the reason for that is because if borrowers are not paying their loan servicer, okay, because the government said so and you can go on a forbearance, that's fine. But the loan servicers still have to pay the end investor, which is Fannie Mae, Freddie Mac, Wall Street, these large pension funds and Wall Street banks and government entities that buy all the mortgages. So my concern is that we might in 30, 60, 90 days return to a normalized market because people are back at work. You know, my hairdresser was able to make her payments, so she's not in foreclosure, bringing the market down. The guy who is the Tesla, you know, representative, he sells a bunch of cars, so now he's ready to buy a house. That all kind of makes sense. My concern is that 90 days from now, we're going to get back to what should be a normalized market, and maybe the mortgage market doesn't look the same. So we're already seeing a lot of jumbo lenders pull out of the market. So if you're buying a house, you know, over 800,000, 900,000, definitely over $1 million. If you're getting a loan amount over 760,000, that got exponentially harder in the last 3 weeks because all the jumbo lenders, fearful of kind of where this was all going, pulled out of the market. A lot of the outside of the box lenders, people that do bank statement loans and asset depletion loans and a lot of loans for self-employed borrowers, they pulled out of the market because they're scared about not getting paid. You know, credit guidelines went from, hey, you can buy a house with a 600 FICO to maybe a 640 or a 680 FICO, depending on the different type of product. So my concern is, you know, kind of somebody's going to be left holding the bag of all of these millions of people not making their mortgage payment. That's probably going to be the mortgage industry. So it's going to feel horrible if Tracy, my hairdresser, the guy that sells Tesla cars, you know, in 60 days is ready to get back to the market and buy. And I have to tell them, hey, I'm really sorry, you're 4 months too late. The mortgage product that would have best served you no longer exists.
So it's going to affect the buyer pool. Essentially, it's going to
affect the buyer pool in a big way. And, you know, people like to say, oh, this is a buyer's market, this is a seller's market. I actually think going into the summer, it's going to be a lender's market, meaning the lender, whether or not they can or cannot piece together the transaction and make it work for that more inside the box vanilla client, that's going to be the defining factor of whether or not the deal gets done. It's not a matter of whether the house sells for, you know, 600 or 640, or if the seller can, turn the screws a little bit on the buyer, or whether the buyer can turn the screws a little bit on the seller. It's going to be, do you have a lender in place who can make this deal happen? Right. So it should be a very interesting, challenging summer, but like everything else, we'll get through it, right? All this stuff is cyclical. You and I lived through 2009. A lot of people watching this probably lived through 1991. You know, there's just like every 10 years, there's some major disruption that we never saw coming, except for the fact that it always happens. And you know, we'll get through it just like everybody else does.
Absolutely. Well, Scott, I thank you so much for your time this morning. I really appreciate it. I have a feeling in a couple weeks we're going to do this again because everything will change and we'll have more to talk about. But I really appreciate the conversation for today and what's happening today. It was awesome.
I appreciate you, and we'll talk soon.
All right. Thanks, Scott.